All right, what's going on, team? Hope you guys are all having a wonderful day. So in this video, we're going to talk about perhaps one of the most important lessons that we will ever talk about. And we kind of hit on it a little bit in the last video with trend lines, but this is going to be support and resistance levels. Now, if you go ask 100 different traders, there will be 100 different answers to how to identify support and resistance levels, how to trade using support and resistance levels. I would encourage you to watch a lot of videos on this, and I think you'll get a very good understanding of just how useful they can be and how many different ways we can use them. So I'm going to discuss some ways in which I make use of them and how we can best understand them. And it's going to be pretty hard to fit all this in one video, but over this entire course, it's probably going to be the most important thing that we discuss next to maybe risk management. Okay. So we've actually already hit on support and resistance levels a few times. The first being when we learned how to identify a trend, right? So let's look at a basic uptrend with higher highs and higher lows. Okay. So what's one way we can identify, say, support, okay, which is a level in which price should hold, okay? My favorite way is if a level is tested, like this level, price comes down, it bounces off this level, and then it proceeds to make a new high relative to the previous one, then this is now a major pivot. Now, in my trading model, I often refer to pivots, aka, a form of support and resistance, right? We have major pivots, and that is a support level or a resistance level that has led to trend continuation, right? So we have a high, a low, and then a new high relative to the previous one. Versus, say, we come and we make a higher low, and then without trend continuation, i.e. without a higher high above the previous one, let's say we make another higher low here, and then we push to a new high. Now we've got two types of support levels or pivots. Again, when I use the term pivot, we can kind of use this interchangeably with support or resistance. But now we have the major pivot, which in between are higher highs and higher lows, right? Here's one high, here's the new high. The lowest point between these two highs is the major pivot. And any points between this major pivot and the new high, say this one, would be a minor pivot, right? And that's a pivot that is after a minor pivot here, right? This little high is not a new high, so it hasn't led to trend continuation, but it could still be quite pivotal, right? So that's an important distinction. Again, not everyone is going to maybe care about that, but I definitely do, right? We have major pivots, and then we have minor pivots, like these higher lows. Okay? So an important distinction to be had there, and you're going to hear me use the term pivot a lot in this course, so definitely want to get used to it. So whenever we have a level that leads to a new high, and again, the same exact thing is true with downtrends, right? This is a major pivot lower high, a potential level of resistance, because it leads to a new low relative to the previous one. And then this is another major pivot, because between this low and the new low, this is the highest point that price bounced to. So this is your bigger picture trend like this. You just had a little bit of a pit stop here where you made another subsequent lower high at this minor pivot. Okay? But sometimes these don't really help. Let's look at some actual examples, right? So here we have an existing uptrend, right? Composed of higher highs and higher lows. And here we have, funny enough, this is actually a level that we looked at in the last video, which is connected by this trend line up here, right? Where we connect these 2 points and it reaches down here. Now, I don't really focus too much on angular support and resistance. It can definitely be helpful. And quite often in trading, you're looking for a confluence of factors to give us a better edge. You know, you might have, think about this, if you flip a coin, there's a 50-50 chance it'll be heads or tails. So if I blindly go and buy and sell at any moment with no extra information, there's a 50-50 chance I either win or I lose, in theory. But now let's say, I'm looking to buy, but I'm also buying at this trend line potential support. Maybe now instead of a 50% chance for this to be a winning trade, buying here is a 52% chance or a 55% chance to be a winning trade. Something like that. That's the general idea. Now, how about this too? We have an existing trend where we've moved higher, or we can even identify this little pit stop here as a level. We've moved higher. We made a higher low, moved higher again, made a higher low, moved higher again, made a higher low. And now we've got a lower high and a lower low. So we have 2 trends here, right? In theory, you know, on a higher time frame, this is one move, right? And it would look like this. And this ends up just being a higher low relative to the big picture. Same here. But the more we zoom in, the more trends we are going to see, right? For example, in the grand scheme of this one push up, we have multiple trends. We have this uptrend here and this downtrend here. So let's focus a little bit on, I don't want to confuse you guys too much with multiple trends. Again, we're going to have videos specifically talking about multiple time frame analysis because it can get a little bit mucky, but it's one of our most powerful ways of analyzing is looking at multiple time frames. So let's check this long entry here. Keep in mind, we have that angular trend line from earlier, but we're not going to focus on it here. Let's specifically focus on these higher lows and this little trend here. So we pushed up off the low. I'm going to use this horizontal ray tool to outline these levels, right? This is the lowest point. Let's make that green for support. The lowest point between this high here and the new high here. So this is a major pivot. Likewise, in this uptrend, we make a high here, a higher low here, and then a new high relative to this high, right? So this is now also a major pivot in our existing trend. Likewise, the same thing happens here. We push to a new high, we come down, we make a higher low here, and it pushes to another new high relative to this one, right? Just like this one was a new high relative to this one, and this one was a new high relative to this one. So these are all major pivots. And here we actually lose one of these pivots. So this wouldn't be a terrible time on this candle to maybe cut some size, right? And it's okay to cut size into a level that might hold later on. We have to, in this course, you'll see a lot. We're going to talk about not caring about buying the low and the high. Having to buy the low and sell the high to be successful is a complete fallacy. The real goal looks something like this. Okay? Again, I more often than not will focus on uptrends, but the exact same thing is true on downtrends, right? The goal is not to buy right here and sell right here. Or in hindsight, maybe that is the goal. The best thing that can happen, right, is to buy here, sell here, buy here, sell here, buy here, sell here, so on and so forth, right? That's the best possible outcome, but it's unrealistic. 9 times out of 10, you are not going to buy the lowest point of a higher low, and you're not going to sell the highest point of a higher high. It's just not going to happen. The real goal should be to catch the middle 70%, right? It's extremely attainable, and it totally throws this kind of fear of having to be the low, having to be the high out the window, okay? The goal should always be to catch the middle, all right? So just looking at, say, the past major bull market for Bitcoin, the goal should not be to buy here and sell here. It sets very unrealistic expectations. The goal should be maybe once this trend of lower highs is broken, to catch the meat of this trend until this pattern of higher lows is broken here. So if you can just catch this much, you are going to make more than 90% of people investing, because so many of them are focused on if they can't catch this and this, then they're a failure. And that destroys people. It really does. So we want to focus on catching the middle 70%. Now let's go back to our example with these two major pivots. Okay. So one good trade would be, remember, we have essentially 3 trends going on here. We have the big picture trend, which we want to be trading in the direction of this trend. We really want to be a buyer more than we want to be a seller. Big picture here, because long term, and I'm talking very long term, Bitcoin tends to make higher highs and higher low, right? Big picture, this is Bitcoin's trend. And this only goes back to 2016, but you'll see that it actually has done it even longer than that. Basically, since its inception, Bitcoin has always made higher highs and higher lows in the long term. So looking at a multi-year investment, I want to buy Bitcoin more than I want to sell it, okay? And that same thing goes when we look and zoom in, right? Let's just talk about current day, right? I want to be buying this because the current trend right now is higher lows. And again, a little bit of a poor drawing, but you get the idea. Higher lows and higher highs. So in general, whether this is the higher low or maybe it'll be somewhere down here, I want to be a buyer eventually on Bitcoin. So I'm going to be looking for buy setups more than sell setups. So again, for the third time, back to this little example here. If you've been trading this more intermediate term trend, you've been on the long side, you've been a buyer, but now you've lost a major pivot. That is a pivot that led to a new high. Maybe you want to look to cut some risk until we can get back above that major pivot, which, and this is not always going to happen, but in this case, it happened just 3 days later, right? You closed one candle below this pivot, and let's do this on a day-by-day kind of analysis, okay? You close below this pivot, maybe that's a time to get out, right? If you've been trading this since 17, 18K, maybe you first bought on this breakout from this high here, and maybe you took some off, maybe you took some off here and here, maybe you took a little bit more off here. You know, we're going to assume we don't sell the highs and we don't buy the lows. We're trying to catch this middle 70%. Let's say you took some off, maybe you added a little bit more somewhere in here, or maybe somewhere in here. But now that you've lost your major pivot, let's say you cut your position, okay? And you would look to get back in if you can reclaim this previous major pivot, right? How do I go forward one? Is it like this? Here we go. So now we've actually closed below this major pivot too. It's not looking good. It's not time to buy in yet. Let's go one more candle. Well, this is a good start. We have a candlestick setup, which I know we haven't learned yet, but in the future you'll learn that this is a bottoming tail plus a bullish engulfing setup, that's a good opportunity to long or buy. But I'd really like to wait and close back above this other major level before really adding some size on. Which again, this won't always happen as quickly, but it happens the very next day. This is a very good buying opportunity. Now, I'm going to zoom in a little bit so we can get a little better representation on why this is such a good opportunity. And we're going to find there's a lot more support and resistance levels on a lower time frame. So let's zoom in on this little downtrend to showcase why this reclaim of this level is such a big deal. Let's go to the 4 hour. That should show us good enough. Yeah. Or maybe even the 1 hour will show us even better. Okay, so we're just zoomed in here, right? This is that major pivot on the daily. And this, and I'm going to remove this because it's a little distracting, but this is our downtrend that we previously saw, right? It starts with this range up here, which is lost upon making a lower high and a lower low. And now we have a new downtrend, another lower high, another lower low, another lower high, another lower low, lower high, lower low, lower high. And again, you really got to zoom in now to really see this, but another lower low, another lower high, lower low, lower high, lower low. The first sign that this trend is reversing is right here. When you follow this 1 hour trend of lower highs and lower lows all the way down here, you can see we get the first little pop of a higher high and a higher low just on the lowest time frames. Again, on the daily, this is not visible yet, right? And then we get trend continuation on this new trend, right? We have a high and a low, a new high, a higher low, a little minor pivot here, right? And then continuation. This is the same as this, right? We get that? This is the same information. We just have more candles. So now we have a better representation of why we're buying that candle on the daily. It's because we have a new trend. Again, excuse my crude drawing, but this is that lower time frame trend of lower highs and lower lows. Now that we have a new uptrend, we want to be back on the long side, keeping in mind that big picture, we really want to be a buyer because we're now in a new big picture uptrend inside of Bitcoin's very long-term uptrend. So hopefully that makes sense, guys. Again, I could do a video with about 10 or 20 hours of examples on support and resistance, but without all of our other tools and techniques, it might get a little bit confusing. So for now, just focus on horizontal support and resistance, which is typically made up of higher lows and higher highs in a trend, or on the downside, it's the exact same thing. Maybe we should do a little example there. Lower highs and lower lows, right? These are our resistance levels. Again, kind of a crude drawing, but you have this trend of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Only here do we get this first sign of an uptrend with these higher highs and higher lows. And as soon as that is lost, it's back to this bigger picture trend of lower highs and lower lows. Again, trend in a trend, guys, right? You might be looking to be a seller on the intermediate term here because we're making lower highs and lower lows. We're forming all these different resistance levels. But on the near term here, maybe you're looking to be long with these little higher highs and higher lows, right? You can be a better buyer here, a little bit of a seller, a little bit of a buyer. And then as soon as this trend breaks down again, it's back to this intermediate term trend of lower highs and lower lows, okay? So you'd look to be a better seller. Anyways, it's going to be hard for me to talk about this anymore without getting a little bit into the more advanced stuff, but hopefully that gives you a good rundown on support and resistance. And again, there's all kinds of tools that can be used to better understand this. Again, we're going to use moving averages, like you can see here. We're also going to use the Fibonacci tool that we showcased in a previous video. Check this out. Look at this perfect hold of a 50% retrace, which is basically showing that after this move up from this low to this high, this level is equidistant between these two. Right? And you're going to find more often than not, quite often in a bigger picture trend, the higher low will come right in the center of these two pivots at the 50% retrace. But again, we'll talk more about these a little bit later. And specifically in the next episode, we're going to talk about all the different technical indicators that I use, from moving averages to slow stochastics and this CCI as well. It's going to be a fun one. So if you guys ever have any questions, again, feel free to reach out to me on Discord and Block Circle. I'm around pretty much 24/7, and I would love to help answer any questions that you guys have, okay? So I will see you guys in the next one. Peace.